Good morning from Chicago traders. It is Wednesday, October 8th, 2014, 8:02 a.m. Chicago time, 9:02 Eastern. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick review of the news overnight. ECB's Constancio says ready to steer the balance sheet to significantly higher levels. The economy is still weak and fragile, and the Eurozone sees €1 trillion eligible assets for ECB purchase program. That's big. Definitely not intending to buy junk. Will buy lower amount than theoretical maximum. So there's a clear indication by the ECB on their asset purchase program. China's September HSBC PMI services fell to 53.4 from 54.1, missing expectations. German DAX is now down 10% from its July record high. The German Bund at all-time highs again, predicting that on the prediction that the ECB will take action with this purchase program to put pressure on yields. U.S. earnings start today with Alcoa, Pepsi, Family Dollar come out tomorrow. WTI crude futures trade at lowest level in 18 months. The API release yesterday of crude oil inventories after the market close showed the largest build in since April. So we have crude oil coming out today, of course. So that we'll see the follow through on that, but definitely seeing some pressure, downward pressure at the gas pump. I think it was reported yesterday somewhere here in the United States that you could buy crude for $2.75, not crude, the gasoline for $2.75 a gallon. It's quite amazing. As far as what's ahead today, at 9:30 Central, we have U.S. DOE crude oil inventories expecting 2 million barrels. And then for gasoline inventories, we're looking at negative 500,000 barrels. For U.S. distillate inventory, looking for negative 1.5 million barrels. Refinery utilization at negative 0.8%. And then the key item for the day is the FOMC minutes from the September 16th and 17th meeting. They'll be out at 1 o'clock today. So pay attention to that. Even though we know what the result of that was, for some reason the market's paying very close attention to what was said during the meeting. I guess it's a way of predicting what comes next. Currently, Fed's Evans is speaking on the economic outlook in Wisconsin. It started at 7:30. He's still talking. And then there's at noon today, there's a 21 billion 10-year note auction. Again, noon, 21 billion 10-year note auction for those who trade treasuries. So let's look at the markets. The technical picture here is always. Recall yesterday that the primary trading idea for the day, or the primary hypothesis, is for the market to open out of range. We had a gap. Market was selling off just as the trader bite was taking place. The expectation is for some responsive buying into the prior day's range. The extent of it would be, the extreme of it would be 58. If not, the overall picture, as I'd said, is leaning on the sell side and looking for 38 quarter, 38 half, and 38.75. This point of control and gap as the key areas below. What the market did is it pushed to 51.75. 5 ticks into the Monday range. As expected, it found sellers, came down to the IB low, which it had put in at 39.75. and attempted again to get back into Monday's range, failed, and then sellers came in to take it down to the primary target. Next target down was 36 and a quarter. And then the key area that we're likely to test here is 18 and a quarter, but this is falling into, again, it's falling into the balance that was created back here on the 1st of August to the 12th. And if you recall, when we were dropping last Thursday, the target below is 15 even, the point of control of this balance zone, and that target is back on deck for today. I think that's where we're likely heading. That's only 13 points from where we are now, well within the grasp of the range here. So I think that we're likely to get down there, more likely to get down there than to push up. Again, that's the primary trade idea. So yesterday, Hypo One played out pretty perfectly. Took a couple tests. We found initiative sellers at the beginning, and then we found responsive buyers back to try yesterday's range. But the key piece of the puzzle yesterday is that we couldn't hold the prior day's range, Monday's range, and fell back out. I did expect a 38.75 on this run here. It did not happen. The market managed to recover back about 10 points before it started to sell off again. Not an easy trade in here. If I look at my trigger chart, this was discussed yesterday during our webinar at stage 5, but you look at this action here before the drop, and it's pretty tough trading in here. You have to be patient. You have to take your I just don't see how anyone can be binary in these trades, meaning you're either on or off. I rely very, very heavily on scaling out and mitigating risk, creating what I call an asymmetric risk profile with by scaling out to be able to withstand these whipsaws here. But once it broke through the IB, very clear what the intention is. Got its 38.75, 38.50, looking for 36 quarter next, got that, went to 36.75, finally tags 36 quarter for a 3-point rotation, and then continues to drop. Yesterday leaves us with neutral extreme day type, neutral extreme. We broke the IB high early, we broke the IB low late. In other words, the market did its best and attempted to push higher and absolutely failed. And when it did, it failed with force, and it closed near the lows of the range. That's what's called neutral extreme. Neutral extreme portends or predicts continuation lower, and that's why I'm saying I'm looking at 18 quarter next. Again, we're through the key LVN of this area here, which is where the overnight high is tonight. But there's not much to defend this. If this buying spree here that created this V bottom, which was a beautiful formation, the V bottom here gave us the 72.25 on the nose, gave us that as a target for that pattern, which coincided with an existing LVN from this day here on the 30th. And a composite LVN in that area as well. This would have been a beautiful area to look for a short, and it would play the pattern out, but it didn't quite get there. It pushed to 71 and fell off, and now it's the buy zone here has been taken back by these sellers. So this makes for it's not a weak low yet, but the market's definitely revisiting this auction, and that's not what you would expect with very, very strong buying like we did here. The market is should not, I hate using that word, but should not be able to regain an unfair low and aggressive buying. It should not be able to do that. It has, and to me that says 18 quarter is at stake here. And if so, then we've got that 15 even point of control to look for. And that idea is supported by the new extreme view and the fact that the market yesterday could not get back into Monday's range. So this was an impulsive move on Monday, impulsive move down. We had to pull back, so we expected another impulsive move down. Remember, that's the key idea behind the hypothesis. But yesterday we also have an additional impulsive move, which I expect a continuation on down into this 15 even area. Okay, I'm gonna get rid of this. This has been here a while. Below there, I have 1909 actually, 1909 quarter. That's the next area down below 15. Again, on a sell day with an IB low break, the expected range, the normal range, so to speak, is 17.5 points on the high side on a selling day. So if I project that down, it gives us about 1911. So I'm looking for this 1909 quarter as an extended target. Again, the main target's 1915 for today. Main target 1915 for today. That's the primary hypothesis. The secondary idea is that the market somehow finds its legs and is able to find buyers. Probably the probability of an overnight low tag slightly higher than an overnight high tag to satisfy the 97% overnight stat. But if it does find its way back up, that I'm looking for initial resistance at 36 quarter, and then I'm looking for a test of 43.50. 43.50 puts us about 15 points up top, and that's as much as I would expect for the day. If the market finds buyers and starts pushing up, I do not expect it to get out of this of yesterday's range. So yesterday will be the template for today's trading. So areas to watch out for: 36 quarter, 39.75, and 43.50 on hypothesis number 2, which is a buy hypothesis. However, I'm leaning hard on the sell bias for this morning, but that does not mean, I want to be clear about this. That's not a trade recommendation to sell. That does not mean I'm going to sell everything that, every chance that I get, I'm going to keep selling all day. That is what I expect the market to do. The market has to step up and show me what it wants. I'm trading the market, not my homework. And definitely not my P&L or my frustration or my anger with the market. So I'm going to wait for the market to basically tell me that I've got something on the sell side, and then that's when I place my bet and stake money on that idea. I don't step in here and just be a, sell like a banshee. So I know a lot of people want to just simplify it enough to say, oh, we're going to sell biases. There's a sell bias today, so I'm just going to sell. Every time the market drops, I'm just going to try to sell it. No, I'm going to wait for the market to tell me that it's not able to hold levels up higher. It's struggling to keep levels up higher, and I'm going to look for an area that gives me an edge to sell, and then let the trade play out. But that's what I've got for you for today. There's not much more to it. It's interesting looking at other markets. You got to keep an eye on a couple things. The treasuries in Europe, again, pushing against highs. We took out the prior high by a tick, an all-time high in the Bund, putting a lot of downward pressure on equities in Europe. If you look at the DAX, one of my favorite products, this thing has taken quite a beating here. Switch to 120. It's taken quite a beating here. Like I said earlier, it's 10% off of its high from earlier this year, from way up here. Look at that. It's almost a. I know there's a lot of blurring stuff in here, but this is my intraday chart, and I'm looking long term. But it's a beautiful drop here, pull back, lower high, and my opinion on the DAX is that this 8,900 is 8,900 is on deck next for that product. It looks like we're gonna make a quick trip down there, and if you look at crude, Crude is just is really trying very hard to hold on to gains, but crude is not able to withstand the the fact, even though there's a war going on out there, crude is not able to withstand the fact that the economy slowing down, that there are indications that Europe's slowing down and demand is likely to slow down. So we get these high inventory numbers, and the crude is a really a supply demand equation. If you look at the run up in crude here over the last few weeks, last month or so, this is all the ISIS, the talk of ISIS and war and stuff. Crude almost immediately takes a spike. But since then, some big selling days, and it's continuing its lower downtrend, and it's basically pushing against the lows earlier this year. And that's how things are shaping up for crude. We have a gap down on those WTI, on the API numbers that came out yesterday, and the market's not able to keep a bid in this product. So that that makes it cheaper to operate, but still, I think crude is giving us an indication that it's just not able to find the demand, and there's definitely a sign that the major economies are slowing down. So those are the key elements. I would, if you don't have it, I would put up a U.S. dollar chart short term. I'm going to take down a tick chart here, and I'm going to put up a U.S. dollar chart. I know it's been a driver lately with the way things are shaping up in Europe and Japan. There's a macroeconomic push to fight the dollar. There's an unannounced currency war going on between these central banks, and it's driving some of the trade as well. I'll leave you with those thoughts, and I wish you good luck for today. Again, if you don't define risk, you're a gambler, and your probability of ruin, in my opinion, is very high. I know it sounds like a cliche, but it's really, really important for you to decide how much you're willing to bet on the probability that you're trading currently, and to just stick to that and let the trade play out. Don't be a micromanager of your trades. You've done the homework. You've looked at what you need to look at. When the trade is on, your mind is not designed, in my opinion, it's not designed to deal with the information objectively in real time. So you have to trust the homework that you've done and just let the market either take you out or pay you. In either case, one of the biggest things I see here at stage 5 with these traders is interfering with their plan, interfering with their trades, and then when the trade works, even though they botched it, then they try to get in there and repair that situation by fading or flipping or whatever, and it costs them more money. That's not how professionals trade. Good luck today, and I'll catch you tomorrow.